Welcome to Looking at the Markets with David Modell. Today we're going to discuss and explain the Coppock curve, which is one of the lesser known indicators, but it has a lot of similarities with some other indicators you probably have heard about, such as stochastics, RSI, that kind of thing, because it is a momentum oscillator. And it's actually a smoothed or smoothed out momentum oscillator. Now, what does that even mean? Well, a momentum oscillator basically, oscillator means that it bounces up and down between two numbers, within a range. It doesn't go higher than the top of the range, and it doesn't go lower than the bottom of that range. So it just kind of oscillates or, fluctuates back and forth, up and down within the range. Unlike a moving average, which, doesn't just go within a range. A moving average could conceivably go up and up and up forever, or down and down and down forever, if a stock just keeps going down. So it's an oscillator, and it is a momentum oscillator, meaning that it shows the general trend or direction of the stock price. And it doesn't have to be used on a stock. You can use it on cryptocurrencies, Forex, commodities, whatever it is you like. Okay, so this is tradingview.com. I want to give them credit, and this is what it would look like for day trading. I should also mention it's a smoothed out momentum oscillator. You notice that it's not jagged, right? You don't see a lot of, jagged ridges there, because it's smoothed out. So it's really just, it kind of averages out the motion there. And that makes it easier to read in some ways. All right, so this is what it might look like for day trading, and I've got the 1 minute candlestick chart here for Home Depot stock on TradingView, and the Coppock, the candlesticks are here, and the Coppock curve is down here, and I like this because it's really simple. You got zero in the middle there, and when the Coppock curve indicator is below the zero line, the midline, when it's below the zero and then it pops up, it breaks clearly above the zero, that's bullish. That is, remember, it's a momentum indicator, and so that tells you that the trend is up. The general direction is up. And then when it's above, but then it clearly breaks below the zero line, that is supposed to be bearish. That means the general trend is down. That's pretty simple. It doesn't get much simpler than that. All right, it's not like RSI or stochastics where you have an oversold line and an overbought line and that kind of thing. At least not in the basic version of this Coppock curve. It's really just, is it above or below zero, and what general direction is the Coppock curve line going? Is it generally going up, or is it generally going down? So that's one way to use it. And I suppose you could buy the stock or whatever it is if it's below the zero line and then clearly breaks above it. And then if you wanted to sell, you could wait until it's above and then clearly breaks below the zero line, and then you could sell if you want to. You probably would want to use this with other indicators because it is so simple and it doesn't give you a lot of information. It just kind of tells you the general trend or direction. So it might not be enough for you unless you want something really simple, which it is. Now, kind of like with RSI, you can use divergences, right? If you see the price action of the candlesticks going upwards, but meanwhile the Coppock curve line is going downwards. You see a divergence here. This is going up and this is trending downward generally. That could be an indication. You might say to yourself, hey, wait a minute, those candlesticks are lying to me. The Coppock curve tells the real story of what's going on underneath the hood, as they say. I'm not saying that's always true or that always works. Nothing always works in the markets, all right? So don't think there's a guarantee of anything here. You have to make your own decisions, as always. So that's what you might be able to use it that way with day trading. And then that was TradingView. This is stockcharts.com, which is, I think it's really good for swing trading. This is the daily candlestick chart of Home Depot stock. And here's the Coppock curve again. On the standard settings, you can see the midline, the 0 line right here. And pretty much the same principles apply, just on a different time frame with the candles. These are just daily candlesticks instead of 1-minute candlesticks. And again, you could use it the same way. If the Coppock curve line is below the 0 line and then it clearly breaks above it, that could be bullish. You would have bought, let's say, right here and enjoyed a nice ride up, and then you can get out when the trend reverses. And because if it's above the 0 line and then clearly breaks below it, then the trend, according to the Coppock curve, has reversed. And you could have avoided a lot of the waterfall here, as I like to call it. You could have avoided a lot of bleeding here if you had gotten out when the Coppock curve told you to, basically right around here. All right. So that's the Coppock curve. I explained it simply and I hope understandably. I do coach people in trading and investing, so if you need some help, you can email me anytime at davidmodell@gmail.com. If you like this video, if you found it helpful, hey, why not give it a thumbs up? Please do that. Leave a comment. Do you like the Coppock curve? Were you even aware of it before I showed it to you? Do you use it? Let me know in the comments below. And subscribe to my channel if you haven't done that already, and hit that notification bell. Do it. You'll be glad you did. Thanks a lot. I appreciate it. I'll talk to you again soon.